guys, so I'm just going to go into a wrap up more or less of the week and solidify a few of the things that we've gone over so far. So if I start with the GBP AUD, you can clearly see that I haven't really got the moving averages on here, the moving average. And again, that comes down to your preference, to be honest. Some people prefer the clean chart, some people prefer the extra guidance of the MA. Here, for me, some of the examples will have the moving average, some will not. I'm going to drop some in for educational purposes and others, depending on how I have, how many trades I've done in that week or day. I may not have the MAs on there and I may forget it in a video, but I'm just going to mix it up to give you guys the different variations and viewpoints. Having it on there is not 100% a given. As I say, some people may prefer the analysis, roundups and trade setups without the MA, some with. So going into the week, what we had firstly on the GBP AUD is we were looking at potentially the market coming up into this region to retest. Now we didn't get that. If we just look at the raw round numbers here, we have 1.8700. If I go ahead and pull up the toolbar for this, I'm just going to place on a horizontal line at that level. 1.8700. So as you can see, the market pulled back up off 8.4. Okay, opened on the weekend, a gap higher, we came back in. Where did we rebound from? 8.4, oh no, 8.500 right there. So this candlestick, the momentum, okay, boom, momentum continued down, but the momentum didn't hold. It springboarded back up. So 8.500 right there. We have this bit, and then we also have the wick of the candle just there too. So after that, the market experienced, if I go over to the 4 hourly, the market experienced a pop up into the next region. So we went from 8.5 to 8.7. That's a 200 pip move. That's a 200 pip markup. What is important here is that, again, all of the candlestick formations are in the book, and we would have gone over them on the AstroFX 3-day course. It is important that we utilize some of the candlestick formations to give us a heads up in case of market reversals and so forth, like over here. Bang, we have the bearish engulfing here as well. We have a shooting star here and so on. Bearish engulfing here. So it's good to know the candlesticks, but we're trying to take it a step further. We're going beyond candles now. But again, candles will remain the foundational aspects of the technical analysis. So it's always good to have as much knowledge as you can, build it as much knowledge as you can, keep that in your archive. But on the refinement process, which we are doing now, we want to only use and utilize the tools with the most power. Coming into this region over here, what we had the, one second. So we had 8.5 from across here up until, let's say, those bodies there. So we were in a small consolidation period for some time. Look at 1, 2, 3, 4, 5, and then 6. Look at this as a rounded bottom. Down and then out. Down and then out. On an hourly, let's see how that one looks. The hourly there, it's a little bit more choppy, a little bit more messy. But as you can see, we did have a break, and then swiftly after that, the next hourly body closed back into the range, and then again, spike, 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 spike. In such scenarios, it's really good to, and I'm going to be giving some more live market exercises as we go along, but it's really good to just zoom in and just see where the market is finding support. Focus on the finer details, the finer elements of actually what is the market telling us and communicating at these round numbers. So market popped back up, as you can see, doji candle, but this more or less, spinning top candlesticks here, but they are explaining to us visually that the bottom is now in place. We forced back in here. Okay, but again, 8.500. I'm going to continue to reiterate the importance of the psychological levels, and again, be careful. They need to break, or the market is going to bounce. Market bounced back up, boom, up thrust, up thrust, up thrust. We made highs. What was the high here? 8.733. Took out the open of the week. Which was relatively high anyway. So we went into that zone, 8.7, and then look what happened. Huge pullback, huge wick beyond. 1, 2, 3 bodies could not close They could not close above 1.87, and the market just started to decline. Fall, come back through the box range. If we extended 8,500, look what's happened here. Market's broken back through, retested it as resistance, retested it as resistance again. So orders had been picked up here. So we've gone from 8.4, where profit, this is profit taking. So from 8.7, sellers stepping in, down to 8.4 again, like a similar scenario over here. Went to 8.4, rebounded, 8.4, rebounded. Why? Why this volatility? Why this sudden spike? Because the orders have came in. Now the orders right here, some of them are going out. Also, you could also say that because it's a Friday, again, timing is quite important here. Orders have come out, orders have stepped in, quick 100 pip rally, and then again, look at 8.5. Look at how the market has spiked through 8.5, closed back below. We had the little bearish engulfing. So even after this candlestick right here, that's an entry, because we can see it spiking back into resistance. We know that the market, especially on the 4-hourly now, it's starting to swing to the downside. 4-hourly, what can also assist us with that bias is bringing this across. So we have 0.1, 0.2, 0.3, our standard execution for a trendline bounce. We had the fake out, and then we came back in and back below. So now for me, GA, if we look at it on the 4-hourly perspective, but first let's look at the week. Let's look at the week, because the week is quite important. Because last week I was thinking that the market, especially, okay, if you had the MA on, that moving average will be running up here, but 8.4 we spiked too, so we had bull, bear, bull, bear. I was thinking that the market could take out 8.7 and go to the upside, because monthly was looking pretty decent as well. Because the previous month we took out the wick here. Momentum remained to the upside, however 8.7 was a huge barrier. If you look across here, 8.7. So I wasn't really expecting that on the GA. So where can it go next? Well, what's happened with that weekly closure, because I'm recording this video, it's Saturday, 10 AM, 30th of March. This candlestick has now taken out that wick. So this indecisive price action, if we look closely, momentum has gone and it's closed right at the bottom. It's closed more or less 80–90% of the previous wick. So that tells us now that the momentum on the weekly has found its directional bias, and we are now looking to go lower. We could come all the way as low as 1.8 again. So coming into the day, as you can see, look at the daily. The daily after this day here, so we had Friday, Thursday, Wednesday. So Wednesday, I've just explained the price action on the mini chart. Spiked into 1.87, and then we rejected. So here what we can do is we can do our daily analysis 10:30 p.m. on the end of that day to see where the market can potentially go next. Then what we've seen is, boom, pullback, breakthrough, but we've also engulfed 1-2 previous days. We've broken out of the box range there, which have kept on from the 4-hourly, and then the market spiked straight back into it. Retested it, but we've also closed below 1.84, which we didn't before. So we had resistance, support, support, now we're breaking that. Next downside targets, look for the major key level here is 1.8, just from my experience on GBP AUD. So 1.8 is the big round number to keep an eye on. So that's 350 pips. We could see maybe a pullback and then downside movement, downside momentum, which I do definitely think is going to happen. But that's just a wrap up of the week so far. If we look at also the Astro flip side of things, if we look at this chart from the other perspective, utilizing the other side of our mind and brain, we can see that the market was stepping up nicely. Again, this looks like a nice bull run, right? This is looking like a nice bull run. And then even across here, we have obviously 1.8, and then we have maybe a target 1. Keep an eye on what's that coming in at, more or less near 1.8200. That could be a pretty decent setup as well. If we took the wicks and the bodies, this is an average right there. It looks like the price could maybe, come back down, create one more higher low, higher low, and then continue upside. So that's looking as if, again, wicks thrown to the downside. So again, this chart just helps you with your confidence. If you're better at picking longs or better at picking shorts, we can just bring this here to the side and look at the wicks and look at the formations to see, does my experience and intuition pick up this as a nice long opportunity to assist us with the bias over here. So retest and then back down. So that's looking pretty decent, to be honest, on the GA. But I am surprised that didn't go as planned to the upside. Moving over to dollar CAD, I'll split this video up into two. 1 second. Just make some notes. Alright, so dollar CAD. I was looking at this pair in the light of bullish movement coming through. Again, if you have the moving average on here, the price is still sat above the MA. Can maybe just throw that on. As you can see, price is above the moving average. This is why I was quite disappointed in the price movement, that we didn't get what I was looking for. So MAs are still, just move that, moving average, the price is still above the moving average. What we can see here though is that we made a high at 3,500, I believe. Monthly, the new monthly candle opens on Monday, so we can still continue, fulfill this wick here and then maybe come to the upside. It's a bit of a tricky one, because what we can often see and expect after moves like this, when the market has swiftly shifted in a rapid manner, and this huge bearish engulfing candle, what often happens, the market may trace price back up and may retrace here. If you can look at this from top to bottom, if I go ahead and maybe use the fib retracement from the high down to the low, what we can actually see there is that the price has spiked back into the 61.8, and now USD CAD on a monthly perspective may roll over to the -27, so that's target 1. So with that being said, let's have a look at that on the weekly. The weekly has been stopped more or less by the 61.8 right here. So we have 1, 2, 3. 1, 2, 3. So we're looking at USD CAD can potentially start to take a meltdown to 2.9. So that is why USD CAD has been struggling. Looking at the day on CAD, I'm not sure why these labels are disappearing for me at the moment. I'm not too happy about that. It's kind of annoying. I have to get to the bottom of that one. But 1.3068, we have the lows. The Fibonacci target is 1.29. So if I just place that fib on once again, so from the high down into the low, A, B, C, and then D down here. A, B, C, D. Yeah, that's looking like a pretty decent confluence, to be fair. So that's probably our Fibonacci target 1 can be 0 again, because it can bottom out, retrace, because we're looking at the higher time perspective. So we can expect movement like this. Depending on how long you're comfortable in holding a trade, then that could be something that is sufficient enough for you to execute, hold. Okay, everyone's different. That's why I'm always talking about you have to merge in your characteristics and personality with trading and the chart work. But over here on the daily, let's just go for the back to the lows. So what we've seen yesterday is, if I pull up the Forex calendar, we had 12:30 CAD news GDP. CAD news was a little bit better than expected. So at that time, USD CAD, boom, meltdown. So where did we pick up the orders? So imagine, again, I like to express in the fundamental section, I'm sure you guys will enjoy that, but we have to know what the fundamentals, what's actually going on behind the scenes. Often the price will rally into if I take this zone, range, sorry guys, bear with me, range please, yes, okay, no, don't want to do that. Okay, let me just copy and paste this one. I have to just refresh my screen. But if I take the range across from top wick down to the body, bring this across, we have the market pushed into it once, boom, back down. Pushed into it twice for a secondary test just before the news, because it picked up orders. You look at these wicks, wick 1, wick 2. What happened? 1.3450. Orders are executed. The news consolidated right in the range. It came back. Look at the bodies. Couldn't really close above the range. How'd it go? Whip back down. Boom. News came out. So when the news came out, the orders were picked up beforehand. The market then started to consolidate to wait for the news to come out. The announcement came out better than expected for CAD. So CAD gained strength. And USD CAD, boom, it went from 3,450 to 1.3350. 1.3350. So now, due to this could be the catalyst for the reversal. This is what can happen with the news sometimes. So be aware of where the news is pushing the price into upon an announcement, and also be aware of what is actually happening before the announcement with the news. So we had that, and I think gold made some mad movements as well. I'll get onto gold on the next video. But that could now be the catalyst, guys. And then we had our secondary point up there, where I had the level, the ray, which isn't matched up. I think it's that one right there. Anyway, these labels are quite frustrating. I'll get to the bottom of that. But first target, you know, we could pull back. We could pull back on the day because the day is relatively strong now to the downside. If you look at this, that is a strong daily closure. Why? Because we've closed below the range and also below the supportive handle. Price is currently sat 1.3346. So we broke the psychological level there too. So overall, we have the Fibonacci A, B, C, and then boom, we can expect maybe a nice price meltdown in the next few days. Maybe something like this. So we got some Fibonacci in there. We have ranges, 4 hourly ranges. If you look at the hourly as well, the hourly was painting a clear picture here too. Spike right into it, back down, boom, we made, so we had a 1 high, 2 high, 3, and then it was gone. And then it was gone, see you later. We also can throw in a nice mini little counter trend line break there as well, especially after this candlestick. So the price was building up for a while. Price was building up. Didn't really reach the third tap of the high there, but then, bow. So next downside targets from an hourly perspective can be at the base of the wicks, 1, 2 down here. So again, guys, it's building up the confluences. It's building up the confluences. 1, 2, 3, blow, bam. So that's what USD CAD did the other day, yesterday. Bit of news involved there. So what have we learned from this video? We learned that the bearish engulfing on the monthly time frame, a huge bearish candle, which I'll just revert back to. Price has retraced its steps because it was quite a big move. Price has retraced to the 61.8 on the lower time frames. We have the Fibonacci, which we can combine on the daily and the weekly, A, B, C, D. 450 was a huge barrier right there, psychological level, for 1, 2, 3, 4 weeks in a row now. So the new weekly candle will open. And this fib target does lie at 2.9, so that's quite handy to know. We know that the daily has now taken its toll, and then this downside move that can potentially come in was triggered by news. And we've also explained that before the news, the orders had already been set at 1.3450, and then we can also combine some intraday analysis, chart time, and chart work and dedication is needed for this because you have to be at the screens. So we had 1 high, 2 high, 3 high, breaks the counter trend line, and so forth. So it's a top-down analysis approach here. So we're going from a high time frame into the low. This would have also broke the moving average too, which I don't actually have it on the chart at the moment, but we know now that USD CAD has potentially changed direction, and for the whole week, this consolidation was waiting for this. And then the new month, the new quarter, April, starts on Monday. It's currently Saturday, and then from there onward, we can see a complete shift in price momentum. So hope you enjoyed that video. On to the next.
I just want to go back.